Seasonally adjusted annual sales rate to 504,000. Of course, we'll have more on what all housing data means. But right now, let's take a look at the markets. The Dow closed down at 16,818, the S&P 500 at 1949, and the NASDAQ ended the day also down at 4350. Now look at commodities. Gold closing up at $1,319.03 an ounce, and oil closing down at $106.02 per barrel. Interesting. Now back to the housing sector. Pej Barlavi, CEO of Barlavi Realty, joins us to talk more about today's housing reports and whether any of the indicate a recovery. Welcome back. It's always good to see you.
Thank you for having me again.
This housing market is kind of a mixed bag as far as I'm concerned. On the one hand, it seems like things are booming, but on the other hand, it looks like maybe prices are leveling off a little bit. What do we have here?
Yeah, you know, that onset of rush after the cold winter month, the market was not the way it was for the January and February. It was so cold, and we had such a good rush of March and April, and it's starting to balance off. There's some inventory coming back into the market. The low inventories that you see in some of the major cities, they seem to be a lot more in the market. So I think that's one of the reasons why it's balanced now.
But what I'm seeing, though, especially here in the Northeast, houses that are going on the market, a lot of houses in certain neighborhoods are not even on the market for 3 or 4 days, and they're getting the asking price for what people are asking for.
Absolutely. You know, here in New York, Los Angeles, Miami, Chicago, Boston, these major cities, they're doing really well. San Francisco is at the top of the list. You do see things. I think the national average right now has dropped from about 90 days to close to 54 days. So it's a huge drop in closing time and selling time.
That's absolutely amazing. You're talking about some of the top places where people can sell their homes. Where are there places in the country where it's really not so lucrative to sell your house at this particular point in time?
Unfortunately, if you're in New Jersey, in Atlantic City, New Jersey, it came at the very bottom. So,
really?
Yeah, they're hurting real estate-wise in Atlantic City.
Outside of Atlantic City, what about Florida? There was a point where, when the market bottomed out and you had all those subprime mortgage loans and stuff like that, houses in Florida were going for dirt cheap.
Yeah.
I'm understanding at certain places, especially on the Gulf Coast, like around Sarasota, places like that, the housing market is starting to pick up in Florida a little
Absolutely,
bit.
And the cranes are moving again, construction is up again. There was a time period where all those cranes were just stuck midair. They weren't doing anything. They're working. Developers are pouring money into it. The market has picked up, especially in the Miami region, Aventura region.
I want to talk about a couple of things here in terms of the housing market. How much does the new housing starting market affect our economy right now, new housing starts?
Well, if there's a big saturation, it starts to dip in towards where the prices are really high, and that's when you get that bubble burst. So if there is a good amount, a healthy amount of new construction and new housing, it's really good because it balances some of the pricing, especially in the neighborhoods that need it. The prices will push the prices up. So it's in some markets, it's really needed.
What is your outlook for the housing market? In other words, if I wanted to sell my house right now and I'm in an area perhaps that's a little bit disenfranchised, not at the top of the list, what would your advice be?
It's a good time to sell. I mean, markets our national average was high. I think the market that was released, the data that was released today, it was at 4.9% home sales. That was one of the highest gains we've had in a long time, since 2011.
And you're talking about a housing market that has surged about 19%.
Yeah.
That's not bad.
Not bad at all. And another good sign is that 3.5 million new homes not new homes, but 3.5 million homes are now above water, which is really good news for people that had a problem selling their house or were about to go into foreclosure. At least they can sell their home and get out without the debt.
I've got to ask one thing here in terms of the Obama administration. The Affordable Home Care Act help in terms of what we're seeing right now in terms of people that are buying homes?
Yes, I mean, it helps a small portion of people. But the younger buyers, the under 35 age group, it's really down. It's been down since 1985. And that's really worrisome that the students graduating, they're not buying it.
Right, and I got to tell you, that's going to be a big story. We've run out of time now, but Pej, thank you so much. As always, your insight is just incredible.
Thank you for having me.
You got it. All right. Climate change could cost the U.S. up to $100 billion in the coming decade, so says a new bipartisan report released today entitled Risky Business. Now, it cites major losses in property and crops as well as heat-driven demand for electricity costing consumers billions. Joining us now is Stephen Weisbart, chief economist at the Insurance Information Institute, to talk to us about the economic impact of climate change. Welcome to the show.
Thank you for having me.
Are you surprised, and maybe a lot of people aren't, I guess I'm not, that the U.S. will lose billions in coastal property and other related things due to climate change?
No, if you look at the data going back to 1980, there's been a long-term upward trend in claims for climate change-related events. So this is just a continuation, maybe an acceleration, but essentially the trend has already been there. This is not a surprise.
Stephen, look, ever since Hurricane Sandy, people were concerned about, of course, erosion, flooding, and all sorts of things. And we're looking at a horrific video here. This woman overlooking the ocean here. I guess her house is probably not so safe in the background there. Who in the world would want to buy any sort of waterfront property in this day and age?
Well, I can't point to individual people, but it's still a very popular place to live. People still enjoy the shore. Obviously, there's an increased perception of the risk involved, but more and more people continue to move into coastal areas. So whoever it is, there are lots of them doing it.
I guess people still want to be happy. I mean, oceanfront property is still something that I guess a lot of folks like. But I guess the question is, can the insurance industry afford this? I mean, how can they continue to insure property that they know possibly could be a liability?
Well, the industry